Welcome to the Deep Dive. We're here to, slice through the noise, gather the key insights, and get you up to speed fast. Today, we are definitely plunging headfirst into a big one, Intel.
A real tech titan, absolutely.
Yeah, and it's more than just numbers today. It feels like we're watching a company actively, fighting to redefine itself, maybe a comeback, or perhaps just a really tough transformation happening right now.
It's certainly a critical moment for them.
So our mission here is to unpack their latest Q2 earnings, look at their strategic moves, and really try to figure out where Intel stands and where they might be going. I got a few key pieces from our sources. First, that Q2 revenue, $12.9 billion, flat year over year, surprisingly, but actually ahead of what people expected. Then there's the loss, $1.10 per share loss, which is specifically tied, we understand, to impairment and restructuring charges. We'll get into that.
Right. Important context there.
Looking forward, Q3 guidance is revenue between $12.6 and $13.6 billion and a non-GAAP EPS of zero, just zero.
Wow. Okay.
And of course, you can't talk Intel without mentioning the new CEO, Lip-Bu and this, pretty bold turnaround plan. Includes cutting the workforce by 15%.
A significant move.
Definitely. And finally, for anyone looking at this maybe from an investment angle, one perspective we saw suggests thinking about buying under $19, but with a 2-year time frame in mind.
So I guess the big question hovering over all this is, what do these numbers and these big strategic shifts actually mean for a company like Intel, a foundational tech player? Are these like signs of stabilization finally? Or is this just the beginning of a much longer, more painful journey back in a super competitive market? What does it mean for everyone else?
That's exactly it. That's a huge question. So let's start with that Q2 revenue then. $12.9 billion. Flat, but better than expected. What's your first take on that? Is ahead of expectations a real positive sign? Or is it more like, things could have been worse?
Well, I think the key thing here is that flat revenue. It might not sound amazing, but it's actually a bit surprising. It shows some stability, maybe, especially when you look at how some competitors have been doing. For Intel, after, years of bumps and declines, maybe it suggests they're hitting some kind of floor.
Okay, finding a bottom.
Yeah, maybe it points to some resilience, or at least maybe the decline isn't as steep as feared. In this kind of tricky economic climate, flat can almost feel like a small win, especially when a company is making huge changes internally. It suggests demand isn't just falling off a cliff, even if it's not growing right now.
Okay, that makes sense. Bit of stability. But then you look just beneath that and you see the $1.10 per share loss, a pretty significant financial hit. So what's really driving that loss? And what should we take away from it?
Right, and this gets to the heart of that restructuring point you mentioned. Our sources are really clear. This loss isn't from the day-to-day business failing. It's from these specific impairment and restructuring charges. You can almost think of it like Intel's finally cleaning house. Taking out the trash, maybe.
Exactly. Taking out the trash, dealing with old baggage.
Yeah.
Impairment means they're admitting, okay, some of our older assets or investments aren't worth what we thought. That's a dose of reality.
A necessary one, probably.
Very necessary. And the restructuring part, that's the direct costs of those workforce cuts, streamlining things. It's painful, no doubt about it, but it's like essential surgery. They're trying to shed that old bloat to compete better with, the TSMCs and NVIDIAs of the world. So the loss is tied to the cost of getting back on track, not necessarily the core operations losing money right now. It's a recalibration.
Okay, a painful but necessary recalibration. And that kind of leads us directly to their outlook, their Q3 guidance. Revenue forecast is pretty similar to Q2, between $12.6 and $13.6 billion. But that non-GAAP EPS of $0, that really jumps out. What's that telling us? It really does jump out. First, the revenue range being consistent with Q2. Again, that reinforces this idea of stabilization, not immediate roaring growth. But the zero EPS, the non-GAAP one, that's a big signal. It basically means once you strip out those one-off cleanup costs, those restructuring charges we just talked about, Intel is aiming to just break even from its main business activities. Not make a profit yet, but crucially, stop the operational bleeding.
Okay. Stop the losses from day-to-day operations.
Exactly. It's a critical step before you can even think about accelerating. So it suggests they're laser focused on hitting that operational break-even point while they navigate this whole turnaround. It feels like a pragmatic, maybe even conservative outlook. Halting the Q2 losses is job one.
And the person driving a lot of this, the architect, is the new CEO, Lip-Bu
Yeah.
And his strategy, including that really significant 15% workforce reduction. That's not trimming around the edges.
No, not at all. 15% is a massive cut.
So what's the thinking there? Why such an aggressive move?
Well, it really makes you think about the new leadership's approach, doesn't it? A 15% cut is decisive. Some might say ruthless. It suggests a really strong, almost single-minded focus on efficiency and cutting costs. Liquitan seems to be signaling very clearly it's a new era.
No more business as usual.
Definitely not. Tough decisions are on the table to make the company leaner, more agile, ready for future fights. Even if it causes, significant disruption in the short term, it's not just minor adjustments. Feels like they're fundamentally trying to reshape the company's engine, like turning a huge ship in rough seas, as you said earlier. It's slow, it's difficult, takes enormous effort, but maybe staying the old course was seen as worse.
Right. So let's try and bring this together a bit, thinking particularly about that investment perspective mentioned in the sources. Considering buying under $19 but looking out 2 years, how does that fit with this picture of stabilization, painful cuts, and a long turnaround plan?
Well, that specific insight, the under $19 with a 2-year view, it suggests that at least some people looking at Intel see it as a potential long-term value opportunity
Yes.
if the turnaround works.
The if is important.
Hugely important. And the 2-year view part is critical too. It's an explicit acknowledgement that these deep changes, the job cuts, the restructuring, the operational shifts, they won't pay off overnight. Not even close.
Takes time for that ship to turn.
Exactly. So the idea is if the stock price happens to dip below that $19 mark, it might represent a decent entry point for investors who believe in Lipitan's strategy. Investors who think that over the medium term, say 2 years or more, Intel can actually rebuild its competitive strength and get back to solid profitability. It's definitely a bet on the long game, looking past the current pain.
Okay. So for you, our listener, what does this all boil down to?
We've dug into Intel's latest figures that flat revenue, which, surprisingly, hints at stability. We've looked at the loss per share, understanding it's driven by these necessary, though painful, restructuring costs, that house cleaning.
We've seen their Q3 outlook aiming to basically stop the operational losses, hit break even. And we've touched on the bold strategic moves under new leadership, especially those major workforce cuts, all designed to reshape this tech giant. Understanding the why here, the focus on stabilizing, on efficiency, on a long-term turnaround, hopefully gives you a clearer picture of Intel's current battle and its, very deliberate path forward. It's not just about the surface numbers, it's about the major surgery happening underneath.
And maybe taking one last step back, thinking about the bigger picture. When a major player like Intel undergoes this kind of aggressive fundamental reevaluation, it really makes you wonder about the ripple effects across the whole tech sector. How might these big strategic shifts, particularly the significant workforce reductions, impact the talent pool? Could it change the pace of innovation? How does it fundamentally alter the competitive landscape in semiconductors over the next few years? Will this gamble actually put Intel back in a leading position, or perhaps redefine what their position is in this fast-changing tech world? Something to think about.